The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. The Trader's Edge. Now, Steve Rhodes.
Good morning, folks. Welcome to the November 20th, the terrific Thursday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Let's make sure we have an extraordinary one. Now, the easiest way to do that is to always remember that life is happening for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Now, today, you and I, we're going to go check on the circumstance of these markets. We'll go figure out what those bulls and bears, what those buyers and sellers are communicating to you and I at just past 11 o'clock in the morning. I do want you to know that I'm absolutely grateful for your presence here. But even more important than that, and that's this. During this next 53 minutes, I'm here to serve you. So feel free to send me an email. Send it out to Steve at TFNN.com. Inside that subject heading, please put radio show question. And, of course, if you're inside our Tiger's Den, and you should be, any ping will do. So let's go ahead and get this show started on Terrific Thursday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. So we got quite a rally going on out here. 522 points for the Dow, 87 for the S&P, 355 for the NASDAQ 100, 145 for the transports. The Russell's up 37, 122 for the semis. So we had a rally going on. We're going to evaluate it. If I've got the charts here for the Japanese yen up on my screen today on a daily time frame. You're just going to see that it's going to go ahead and form a TD9 count top. We'll complete that pattern tomorrow. Suggest that we should get a short-term top. At least that would pull back to its oscillator and change line right around 156. Now, the interesting thing about the set of patterns here for its daily, its weekly, its monthly time frame. Weekly time frame completed a TD9 count top last week, and we're negating it immediately. Now, that talks about a very strong upward momentum move. So what's the message here, the daily or the weekly? They're both giving us a message. Now, we can see that what the weekly chart is doing, it's making a run for its TD9 count breakdown resistance area, 158.19. If price closes above that, that's going to certainly be a positive. So I think what the message here is especially it would be very bullish if the Japanese yen could close above the 158.19 level. Of course, we don't want to get in our cars, drive over there because, the dollar is nice and strong against the yen, and that's a beautiful thing. So it looks to me more like what's going to take place. We're going to get a 2 to 4 day retracement on the daily time frame before the weekly starts to resume its further move higher. The 30-minute time frame chart's got a Rhodes momentum indicator topping signal at this stage here. So it's very possible that top for the yen is in. That was the only one that I've got a signal on, but I know that's not really what you're interested in. You're more interested in what's going on inside the markets out here. So let's go take a look at the daily equity future charts out here. Well, first let's start. One thing before we switch off of this set of charts here. What's important to notice, not so much now, but at 4 p.m. most certainly, is going to be that spot VIX index. Right now you can see we're down $2.77 from yesterday's close. That's a minus 11.71% rate of change. If our rate of change is below minus 10% out there at day's end, at 4 p.m., that's going to trigger an initiation to higher price signal. So just keep that in mind. We may not get a less than minus 10%, but just keep that into consideration out there. Now let's go take a look at the daily equity future contracts. What we're going to see out here are 4 new profiles. All of these new profiles will not be confirmed until 6:01 p.m. this evening, but these new profiles have been in place really all morning long and haven't really shifted. The ES Mini shifted probably about 4 or 5 this morning, and it is quite a large profile. It's a bullish structured profile. It's the very left-hand screen that we're both taking a look at, or all taking a look at. You can see the bottom is at 66.24 and the center's at 66.85, with the top being above the prior high the prior profile high. We're at 6,950, very wide profile out. Now, it's bullish in structure. Typically, when you close above the center of a bullish structure profile, you will make it, price will make its way to resistance, which would be the top of the profile. However, we've got a green oscillator and change line, and that's the price that is the level that price must close above in order to really suggest that it's got some legs and will make its way up towards that 6,900 level. There is a descending trend line that I've drawn in here. That is another level of resistance, but we first have to get above that 6782 mark. We are trading above yesterday's high, so that's a bullish signal. So now it's really all about resistance. And on the resistance level for the NQ, which has a new profile as well, slightly bullish structure, but more of just a normally structured profile here, with the bottom being 24,521, top at 25,539. The oscillator and change line, again, it also needs to close above it, just like we did with the ES Mini, it being 25,326-ish. Both the ES Mini OUL numbers that I've given you and the NQ, they're going to change as price rallies and so forth, but go subscribe to Mastering Probability. I show you exactly how to calculate that line, and that would be very helpful to you, in my opinion. If we take a look at the Dow Equity Future Contract, a definite bullish structured profile. The buy zone between 46,229 and 46,485. It's got the top of that profile at 47,762. It's only the ES Mini that has generated the profile that wraps around the prior profiles, giving us a consolidated message out here. So we don't have a consolidation message across the spectrum, but we do for the S&P 500. That's pretty good. So if we take a look at the Dow, it's got to deal with its oscillator and change line. That should be its target, which is 47,201. In the case of the Russell 2000, much like the NQ and the ES Mini, you can see I've drawn in a descending trend line. So those descending trend lines now, in the case of the ES and the NQ, they're inside their profile. In the case of the Russell 2000, it's outside of its profile. So it really doesn't come into play. What comes into play is its oscillator and change line, which is at 2411, and the top of its daily profile, 2421. Again, these profiles will not get confirmed until this evening, but they are worthwhile to note on your charts out there as far as being able to pay attention to what's going on in the market. So now let's go from here. Let's go take a look at the daily. Let's go take the New York Stock Exchange. The advanced client oscillator still below the zero threshold level. So sellers still have an edge out here. In the spot VIX, you can see it, gap to the downside, still trading well above its 50-day exponential moving average. That's at 1847. If price were to close below that, then we'd have to shift our focus to what the markets are doing. So right now, these two indicators give sellers an edge out there, with buyers trying to really do something more than just a two-day counter trend move out here. Let's take a look at the intraday charts now and go see what's going on here. We'll begin this analysis by taking a look at the ES Mini. And on the ES Mini, the first thing that we're looking for, which ones have got confirmed topping patterns. I'm not going to even focus on potential A to B equals CD patterns at this stage of the game. Right now, what I'm going to focus on is a Rhodes Momentum Indicator top on the 10-minute chart. And on the 10-minute chart, we're trading below profile support. So we know that no reason for price not to continue to move lower. If we look at the 15-minute time frame chart, it does not have a topping pattern. Price is testing a key level of support, an area where a market could find a bottom. That would be at 67.37. So we didn't know what level to watch on the 10-minute chart, but the 15-minute chart says watch 67.37. Close below that, we're headed to lower price. The 30-minute time frame chart, we're trading below profile support, so we can't use that. We've got to go to the 60-minute time frame chart. Here we're testing its bullish structured profile support or buy zone, 67.36 being the key number there. Steve Rhodes with TFNN. We'll be right back.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Open Call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
TFNN has launched the Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Welcome back, folks. So back to the ES Mini, just to kind of finish this out here. We're looking for areas of support. So we're trading below. The bottom panel, we're trading below those levels of support, which we've already covered. Now it's up to the 120-minute time frame chart. Now, in the 120-minute time frame chart, we can see that its oscillator and change line changed from red to green. So this is a very important test for it, because the price does find support here, 67.20. That's actually kind of a buy point. Now, if this level fails, the next areas of support for that time frame get us down to 67.03, 66.62, and 66.35. At 66.94, the 4-hour time frame chart has got some potential support. That is its oscillator and change line. But the key level for the 4-hour time frame would be the center of its profile. We've been above that bearish structured profile for more than 2 consecutive bars. So 66.81 is where a counter trend move would come to an end. The 5-hour chart says at 66.74. So the real key levels for the ES Mini, I would say today, are 66.74 to 66.81. If those levels fail, well, you do have daily profile support, so just simply note those figures as well. Let's take a look at the NQ as well out here. So if we take a look at the NQ, see what it is doing at this moment in time, trading lower. I know that. Both the ES and the NQ are trading below their apogee pivot points, which is another kind of danger sign. That came in last night at 1254. No. Not 1254, 2254. Yeah, 2254 is the time frame that it came in. That's coming from my memory, maybe not great memory. Okay, look on the NQ out here. Rhodes Momentum Indicator, top on the 10-minute chart, trade below profile support, no bottoming signal. TD9 count, top on the 15-minute chart, trade below all support, breakout and profile support. 30-minute trading below profile support. 60-minute the same, that's at 25.108. The 120-minute for the NQ, we're trading below its green oscillator and change line at this moment. This bar is going to complete not till, I believe, 12 noon. Yeah, 12 noon. The number right there to watch is 25.010. See if that holds its support. Next level of support in the 4-hour time frame chart. I'll tell you, the next level of support period is 24.901. 24.901 is the top of the 5-hour time frame profile. it's more of an equally balanced profile, so I can't give you the level that the center's at 24, 726, but I can't say that that's where a counter trend rally to the downside would come to an end. It's too close to an evenly balanced profile out there. So I think the real key areas of support are 24,901 and 24,842. If those levels fail, then we likely continue to move lower out there. So it's really all about support because I don't have any kind of intraday bottoming signals out there. Let's lastly just go check at the Dow equity future contract as well. We don't really have that much in the way of request in at this moment in time, so let's just be a little bit diligent here and take a look at what's going on intraday on the equity future contracts out here. So in the case of the Dow equity future contract, has not made its way up to its oscillator and change line. Again, I'm just waiting for these charts here to populate. Okay, next level of support on the 10-minute time frame chart for the Dow equity future contract is 46,440. That is its TD9 count breakout level. Below that, at 46,399, you'd have a TD9 count breakout level for the 15-minute time frame chart. We're trading below profile support on a 30-minute chart. We're trading into, on the 60-minute time frame chart, the level where a counter trend move for its time frame would come to an end are between 46,471 and 46,471. So I'm what? Hold on a minute here. Do we have a new profile? No. No, we don't. Okay, so yeah, 46,471. That can't be it. Yeah, no, 46,471 to 46,502. That is where a counter trend move inside the Dow would come to an end. So if you get below that, that's telling you lower price. If you get below that, I'd say 46,322 is the likely next price target for the Dow equity future contract. That's what's going on there. Let's take a look at the Russell 2000. Let's go ahead and finish this out, and then we'll go to a couple of requests that have come in. So let's take a look at the Russell 2000, see what it is doing. Give me a moment. There we go. All right, so let's take just a few minutes here to, not a few minutes, but a few seconds to actually populate the Russell 2000. Why does it say Russell 2000? Come on, go ahead and populate here. Sorry for the dead silence. So you can see it rallied today into its oscillator and change line, 24, 10, 20 out there. So that's where certainly a counter trend move would come to an end. The next level of support for the Russell is going to be down at 2369.50. That's its 10-minute TD9 count breakout level. Below that, 2366.40. Below that, 2352. Each of those were in progression, 10, 15, and 30-minute TD9 count breakout areas. Other possible areas of support would be 2368 to 2371. On the 2-hour time frame chart, a counter trend move would come to an end between 2364 and 2368. We're above profile resistance on the 4-hour time frame chart, trading inside the profile on the 5-hour chart out there. So how do you sum up all of this? At this stage here, we know we were due for a couple-day rally. Why were we due for a couple-day rally? Well, that's a good question. Let's pull up in the daily time frame charts as well. And the reason, if we take a look at the ES Mini, I'm just simply going to go ahead and populate this by opening it up. And what we're going to see is we had 4 consecutive days to the downside. In bull markets, the moves to the downside from a consecutive day standpoint, you see I'm pulling this back, typically go from 2 to 4 bars. We have had a couple of 5-bar moves inside the ES Mini, one being on August 1st, and then one on August the 21st. Otherwise, as you can see, they have all been 2 or 3 day pullbacks, yesterday being a 4-day pullback. Now, to the upside, we get the same kind of a thing. In a bull market, you're going to get 2 to 4 day. If we are just in a counter trend mode, we will just only start seeing 2-day rallies to the upside for the most part. Too early in this to make that call at this stage of the game, because in the ES Mini, the most key level of support for it would have to be its TD9 count breakout level at 65.71 and that itself has not broken. So that's why, or one of the reasons why we were due for a couple of day rally out there. It was the same thing for the Dow. Inside the NQ, we were down for 4, 5, 6 consecutive days out there. And that's not really the best signal. In fact, if we open up its charts and we pull it back here, let's see, what are the... So we did have another 6-day move to the downside, and that was back on August the 21st. So unusual to get 6 bars to the downside and then start moving higher again. But, maybe the NQ, the NASDAQ kind of overshoots. Remember, the Qs themselves, this is the opposite of what we've been taught, and Tom knows this to be true as well. And that is that the Qs make bottoms with volume. You go back and put up a daily chart, a weekly chart, and you'll see all the bottoms associated with the QQQ. They're done with volume. Typically, those are the days, and it's kind of an exhaustion move. Typically, those are the days where people say, hey, man, we're really getting ready to head lower. Go look at your charts. Put that up there, as that is a cool tool. All right, let's go to our first requests that have come in. Why didn't we get to this earlier? It's NVIDIA. So what are we doing here with NVIDIA? Well, it's ran right up into its profile resistance level. So we looked at this yesterday together. We tried to identify where was support and resistance so you could see how it was trading in after hours. And after hours, it never broke above 194.48, at least not that I saw out there. So actually not a surprise to see that level hold as resistance. All that we've got inside NVIDIA at this stage of the game is a consolidation with inside its daily profile. That's between 180.30 and 194.48. Steve Rhodes with TFNN. We'll be right back.
Building wealth trading in the stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and techniques to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
This portion of the Trader's Edge is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
Welcome back, folks. In just a moment, I'm just waiting for these charts here to populate. These are going to be the charts for Uber, which we'll take a look at in a few moments. But I went back and I went ahead and started the charts to take a look at the intraday signals for NVIDIA as well. So give me a moment. We're going to put those charts up on our screen. They should be right here. Okay. So now we're going to take a look at NVIDIA because we were really struggling to really try to identify some type of an intraday, what's it doing? So from an intraday standpoint, I wanted to see what kind of potential signals we were looking at. So on a 15-minute basis, the level to be watching here is going to be the 187.28 to 188.18 area. That's where, on a 15-minute basis, price should find support. The 30-minute should find support basically right where it's at, 188.87. We're trading at 189.42 right now. If price were to close below that, we'd be looking at a move back towards 185.31 to 186.50. The 65-minute time frame chart is sitting at a potential level of support, old resistance, TD9 count breakdown area, 189. So you want to watch that. You got potential support on a 130-minute time frame. That's at the top of its profile. So we know right now with regard to NVIDIA, at least with regard to 30, 65, and 130-minute charts, is it is sitting at support. So this is the key level inside of NVIDIA, really right around the 189 level. Keep watching that. If we break through that, we're headed lower. So I hope that helped you out, Tom. And let's go take a look at, you also wanted to, nope, that was for Tom. Duncan Steve wants to take a look at APLD. So let's get that chart up on my screen. That should be right here. And APLD is trading right now inside of its daily profile. It is a bullish structure profile, so a buy zone between 21.89 and 23.22. We're trading at 23.09 right now. So just a consolidation inside its profile. The resistance out there, Dunk, is at the 27.23 mark. Daily time frame at a TD9 count top. Price was able to pull back, test its breakout level of support, 22.30. That can be a bottom. A bullish reversal candle would generate a Gartley buy pattern. So you'd want to watch for that one on the daily time frame. The weekly time frame, we've got a price is consolidating with inside its bearish structured profile, a little bit of a danger zone. So if, in fact, price were to close below 22.30, Dunk, we would likely see a move to 15.86. That's the bottom of the weekly profile. And then the monthly time frame coming next Friday, you could easily get a Rhodes momentum indicator top. If that unfolds, what we should see then is price over time pull back towards 16.70. That's its oscillator and change line. So in the case of APLD, that key level is at 22.30 out there. So you want to keep an eye on that. You also want to take a look at ticker symbol VNET. Let's pull that up on our screens out here. VNET is trading out right now at the price point of $8.53. It is trading below the bottom of its daily profile, where it's been below that for the last today makes it the fourth session below that level. And if it does close back below 871 today, that's the bottom of that profile, really increase the odds of a move towards 769. It's TD9 count breakout level. On a weekly time frame, 772 is the bottom of its profile. We got a consolidation with inside that. 1044 is resistance. And on the monthly time frame chart for VNet, where it struggled is at its TD9 count breakdown area. That is at $10.29. So looks to me more like you've got a further move to the downside, Duncan, than anything else when I take a look at its set of charts. So hope that helps you out. We're going to go take a look at Uber. This is for Mohammed. Give me a moment. We'll get over to his chart. Uber is trading out as we speak at the price point of $86.18. So you've got a to B equals CD pattern. Got a couple of them. Well, How about that retracement? Might have been too high. I could come up with another A to B equals CD. Here's what we know. I'm going to start with actually the monthly time frame chart, Mohammed, for Uber. The daily is going to take a bit of work. So on the monthly time frame, TD9 count top, that completed last month. We are now trading below its oscillator and change line. It has lost its momentum. That would suggest that we pull back further. The likely pullback target, at least initial target, 80.57, top of its monthly profile. If we look at the weekly time frame chart, pull this back out here. What do we see? So do we have a top? Yeah, I don't necessarily see that pattern, so to speak. What we do have, though, is prices pulled back into its profile. With it being below 88.20, the next area of support for Uber on a weekly basis is going to be 83.45. So 83.45 is going to be the next stop. And if we get below 83.45, then we get to 80.57. That's how we use the weekly and the monthly time frame. Again, on the weekly, I am struggling to try to find a topping pattern for you. And the reason is because there isn't one. Yeah, there just isn't one. You are in bar number 7 today on a weekly basis. So you're bar number 7 this week, not today necessarily. If we take a look at the daily time frame, now I need to open up this chart and really get a feel for what's going on here. Okay, so on a daily basis, it looks to me like the retracement. Let's get my retracement tool. I think it's function 8. Trying to remember that. Where's the 8? Is this in here? So we're going to go from its high down to its low, and yeah, that was about an 80% retracement out there. So I don't think that's it. From here to here, what's the type of retracement we get? So there's our A to B equals CD pattern to the downside. So with regard to Uber, it's going to start with the high from the trading day of November the 3rd, takes it all the way down to the very next of November the 4th out there. We're just simply going to copy and paste that. Copy it, paste it. Move it over to the C point out there. So you can see it's got a price objective somewhere around 84.50, let's call it 84.90, somewhere right around there. And you're bar number 7 on a daily time frame. So we're on bar number 7 on daily time frame too. Is that also on the weekly? Yeah, weekly and daily. Okay. So Uber has 2 different potential daily patterns to be watching for, Mohammed. The first one, I would say, would be the A to B equals CD pattern. And as price gets towards that 84.96-ish level out there, if you see a bullish reversal candle, that would be a buy the D point bottom. That would be a Gartley buy out there. The other pattern could be a TD9 count. Too early to know because we're only in bar number 6 today. I take that back. So we, too early to know. We wouldn't know until next week on that. So Uber at this stage here, I'd have to say it's headed lower. And you've got those different price objectives out there. So I hope that helps you out, Mohammed. You also wanted to take a look at NBIS. Now, I didn't get a chance to prepare these charts before we came back from break. So we're going to go ahead and put those in right now. It's going to take a few moments for these to populate out there. And then once they do, we'll do our analysis. So what do we got? Sorry for the time it's taking. Why is it taking so much time, Stevie? Okay, so now we take an NBIS trading out at $93.13. Hasn't been trading for long enough for the monthly chart to really give us any good clear signals. So we're going to stay away from the monthly time frame, Mohammed. On a weekly basis out here, can we find an A to B equals CD pattern to the upside? I'll look during the break to see if we can. Right now, you got a consolidation with inside a fairly wide profile between 7104 and 141. That is a wide profile. We'll be right back.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstad's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstad releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
In the world of trading, only a few names stand out like Larry Pesavento. A pros pro with over 50 years of experience, Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Welcome back. We're looking at ticker symbol NBIS. Is for Mohammed. So yeah, on the daily time frame now, we can see the daily TD9 count bottom pattern. That went ahead and completed on November 14th. And since then, we have been rallying. We've had 3 days to the upside, and price ran in yesterday right into its profile resistance level, 96.37. It wanted to make another run for resistance. Up above that was its oscillator and change line, which has changed from green to red. Because that has so far rejected that level, it's kind of a bearish, not kind of, it's a bearish signal out there. But we do have that new profile that formed a couple of days ago. So the key level to be watching here is going to be really 2 levels, Mohammed. Profile support is important at 85.13, 85.38, but the more important level is going to be your TD9 count bottom. That's low from November the 14th out there, and that low is at $82 even Steven. So at this stage here, I would have to say that weekly is looking like maybe wants lower priced. Get no tops in the weekly and the monthly, so it's all being controlled by the daily. But you don't like today's price action. Yesterday getting resistance at the top of its profile today, and its oscillator changed on it back inside its profile. So I'd say a 2-day move to the downside would make sense with price trying to get to the 85.38 level out there. So I hope that helps you out. We had a request to take a look at XPEV. That's from GTE XPEV. Let me get that up on our screen here. So we'll take a look at that. That just came in. That is the last request that I've got. So if you are inside the Tiger's Den, you're welcome to go ahead and put in a symbol, and I'll be happy to get those charts up. In the meantime, with regard to XPEV, trading out at $20.73, likely tomorrow to form a weekly Rhodes Momentum Indicator top. Now, it already had a TD9 count top that was tested and rejected last week, so this is suggesting on a weekly basis out here that price should go target its buy zone, and the weekly buy zone is between 1818 and 1969. On a daily time frame out here, you have a Rhodes Momentum Indicator top, price below profile support. That suggested move to 2001. 2001 gets us back to the top, basically, of its weekly buy zone out there. So if price does close below $20 and a penny out there, not great for the daily, but the weekly still has that buy zone, and maybe that area will hold. On a monthly time frame, I don't have any kind of a topping signal. I've got price above profile resistance and its oscillator and change line, so it looks good. But right now, although we have been down for, well, this would be now we were down for 4 sessions, up for 1. So we're likely headed at least to test support, the first level of support, and that being that 2001, 1969 to 2001 level. So GT, hope that gave the information you were looking for there, and thank you for your request. So no other requests that have come in so far. So let's do this. Let's go. So let me see what charts I've got open. The daily cash indices out here. Let's tool around and see what we've got going on here. The daily cash indices, you can see the S&P 500 rejected its oscillator and change line. not great. The NDX, the same thing. The Russell 2000, the same thing. The semis have not even made it up to that level. We'll go take a look at the semiconductor index charts out there. That would make sense to do that. The transports got up and hit the oscillator and change line. NASDAQ Composite gets up, hits the oscillator and change line, as does the New York Stock Exchange. So the only one that hasn't is the Dow Transports. Is the Dow Jones Industrial Average and the semiconductor index. Otherwise, everything has hit resistance and it has backed off. Now, the question is, where do we close? Do we close above yesterday's high? Do we close below yesterday's low? Let's go take a look at the stocks charts out here. So if you give me a moment, we'll get over to that chart. The stocks charts are not going to be the ones that pop up right away. It's going to be the S&P 500 charts. But we're going to go ahead and put the stocks charts up here. So this will take a few moments to look, on the S&P 500, there's not really much else to report here. I mean, we've kind of gone through that pretty over the last couple of days. So yeah, let's go right to the stocks and see what kind of message we are getting from it. There we go. And this, like I said, this will probably take about 20, 30 seconds to go ahead and populate out here. And we'll see where the semiconductors are trading or what they're doing. So you can see the daily Rhodes momentum indicator top. Price below its green oscillator and change. And of course, we knew that. As far as rallies, if today we don't close higher, we close lower out there, coming off of the top, we would only have one-day rallies out there. And that is not a great signal. Now, to the downside on the stocks, we're going to perhaps be in week number 3. If we close below last week's low, right now we're trading below that, and we're trading below its oscillator and change line. And I think that was really the thing that we might have looked at yesterday. If we looked at the stocks index chart for its a weekly time frame, what we noticed is that price has been above its oscillator and change line since April 25th, since the week of April 25th. The monthly chart, again, could form a Rhodes momentum indicator top, could form a sell the D point top, just needs that bearish engulfing, needs a bearish reversal candle come next Friday out there. The issue is that weekly chart. It just doesn't. Well, hold on. Maybe if we've got I take that back. If we've got if we've got an A to B equals CD pattern on a monthly chart, then I certainly have that on the weekly chart as well. So the weekly already has a sell the D point top. So the weekly's got to sell the D point top. The daily's got a Rhodes momentum indicator top, and the monthly next Friday may form a Rhodes momentum indicator top as well. And what all that would mean at a minimum is that price should pull back then to 60.74-ish. That is its monthly oscillator and change line. Of course, we know that number would move lower out there. What other things do we want to try to take a look at out here? Let's go take a look at. Let's go see what some of the other, let's see what MAG 7 is doing, MAGS. So let's pull that up on our screen, see what the MAG 7 as a group are doing out here, see what that signal is. We should go take a look at the equal weighted ETFs as well. So we'll try to do that here. Really, this was not the chart I should have put it on, but I did, only because I don't have the profile levels on this chart. But if you take a look at MAGS, that is the MAG 7 out there, prices first found support at its breakout level, so very much like the NQ, 63.09, and it has found resistance at its oscillator and change line. The daily time frame for MAG 7 has a TD9 count top. The weekly, a Rhodes momentum indicator top, and the monthly could form a Rhodes momentum indicator top come next Friday out there. So it's looking like, and if that were to be the case, I would say more likely than not, the MAG 7 are getting ready for at least a 2-month decline out there. If we take a look at the MAG 7, this is an index that formed back in April of 2023 out here. You'll see that on a monthly basis, we've had one 3-bar move, two 2-bar moves. This is likely to be bar number 1. So it would add to the idea that we'd be looking at a 2-month decline out there. And that's coming courtesy of the MAG 7. We got a request. Thank you, Duncan, who wants to take a look at ticker symbol. Let me get really back to the right spot for this, which would be SNDK. So let's get this charts up here. Now, we may have to review this, Steve-O, when we get back from this breakout there. We'll have a few seconds, I think, just to try to take a quick peek at it. And the SNDK down big time. All right. So that obviously hasn't hit my chart. So the question is going to be, where is support? So we know as soon as these charts here populate, what we're looking for, what our eyes are looking for, is where is support. So let's do that when we get past the break. Those of you inside the Tiger's Den, this chart's going to be streaming. You answer the question, where is SNDK headed to? And why? Steve Rhodes with TFNN. We'll be right back.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
In the world of trading, only a few names stand out like Larry Pesavento, a pros pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
Welcome back, folks. Look at a SanDisk. SNDK is a ticker symbol out here. Duncan, what I want you to notice on this chart here is I want you to look at the weekly time frame chart. And what you'll notice here is that we now have a change in trend. I'm assuming it doesn't rally and close back above last week's low. This will be the first time in quite some time that we will close below a prior low out there. When was the last time that that unfolded? It was back in July 18th out there. So that's the first thing. What does that say? Well, if we look at the daily time frame chart, we have a Rhodes momentum indicator top, bear structured profile. So we know that the first level of support for SanDisk is going to be 194.98. I'm not saying that's the bottom. I'm saying that's the first level of support. Below that, we likely head towards the 130.50 level. It's TD9 count breakout area. So that's what I see when I take a look at SanDisk. It looks like this has changed its trend trend, and that's important to be paying attention to. You know, I mean, you could take it certainly has lost its momentum, that's for sure. And I say it's changed its character out there. Just because I say it doesn't mean that it has, but it has changed its character. We're going to finish out the show looking at WDC out here. Is this I remember what was when? I don't remember this is. In any event, we've got a daily Rhodes Momentum Indicator top. Bar number 6 to the downside. I don't know why I don't have any, profiles are way well below price. We should head lower. A price target of 121.85 at TD9 count breakout level, but I doubt we'll get down there before we form a TD9 count bottom pattern, but we got to check back in next week. So ELO, let's check back in on this next week. The weekly time frame does not have a top. It's got a negated TD9 count top, but price is pulling back and is testing support, which formed below price. So this should find support at 145.14, but if it doesn't, then we're going to move down towards 136 level, maybe 118 to 125. And finally, the monthly time frame chart, not really assisting us a whole lot out here. You can see that we have closed, or it looks like we're going to close below last week's low on WDC as well out there. So that's what we've got, folks. Thanks so much for tuning in today on Terrific Thursday. That's what I want you to have. But more importantly, please join me tomorrow for fabulous, fantastic Friday out there at 11 a.m. sharp when we do that 11 a.m. update. So have a terrific day. Be safe out there, and I look forward to seeing you tomorrow. Thanks for joining me.